Investing should be more like watching paint dry or watching grass grow. If you want excitement, take $800 and go to Las Vegas. This quote perfectly sums up the idea behind investing in index funds. It's a strategy that prioritizes steady growth over high-stakes risks. In this video, we'll show you and John the 7 best index funds that promise not just stability and simplicity, but also the potential to significantly grow your wealth and become a millionaire over time. We'll show you an index fund that'll make you a millionaire in less than 20 years, and in the end, we'll show you multiple funds that will make you a multi-millionaire. But before all that, let's take a quick look at what index funds are. Index funds are a type of investment that allows you to buy a little piece of a big group of companies. Imagine it like buying a small slice of a big pizza. This group of companies is chosen to represent the overall stock market. So when the stock market does well, your investment does well too. It's an easy and less risky way to invest your money because you're not betting on just one company. Instead, you're betting on the whole bunch, and most of the time, the bunch goes up in value over the long run. So, index funds are a simple way for people to invest and grow their money without needing to be experts in the stock market. Next up, we have the 7 best index funds of this year, each ranked to offer higher returns than the one before. Starting at number 7, we have Vanguard Total Stock Market Index Fund Admiral Shares. Known by the ticker symbol VTSAX, this index fund has an average annual yield of 9.36%, offering a good opportunity for growth over time. Additionally, it provides a dividend yield of 1.4%, which contributes to its attractiveness for income-focused investors. One of the most appealing aspects of VTSAX is its exceptionally low expense ratio of just 0.04%, making it a cost-effective choice for investors. Based on these metrics, if John continues with his investment strategy of $12,000 each year, he'll reach his goal of becoming a millionaire 23 years from today. After 23 years, he will have a portfolio value of $1,032,438. For his investments over the course of 23 years, he will have only invested 23 multiplied by $12,000, which is $276,000, plus the initial investment of $12,000, totaling $288,000. This represents an increase in value of $648,438. If he continues to invest for another 7 years in this fund with the same strategy, after 30 years, John would have invested $372,000 and his portfolio would be valued at $2,057,118. That's doubling his values in the next 7 years, which is what we call a compounding effect in long-term investment. That is, increasing investment values faster than the previous year. The main goal of this investment fund is to copy how the CRSP U.S. Total Market Index performs. This index shows a broad view of the U.S. stock market, including all kinds of companies from the biggest to the smallest. The fund does this by picking a range of different stocks, making sure it covers a wide variety. This way, it matches the main features of the index, like the types of industries, the size of the companies, and important financial details like stock prices and dividends. In terms of how well it does, the fund has been good at staying close to its target index. Next up, we have iShares Core S&P 500 Index ETF. Known by the ticker symbol IVV, this index fund stands out for its solid performance and strategic focus. It has an average annual yield of 9.8%, backed by a dividend yield of 1.7%, and a low expense ratio of just 0.03%. Based on these metrics, if John invests with a $12,000 strategy every year, he'll reach his goal of becoming a millionaire in 23 years from today. But this time, his portfolio will be valued at $1,110,885, almost $70,000 more than the last fund. John will have invested a total of $288,000, resulting in a value increase of $726,885. If he continues with this strategy after 30 years, John will have invested $372,000 and his portfolio will be worth $2,267,157, a capital gain of $1,895,157. This fund aims to follow the results of the S&P 500 index, a well-known marker for big U.S. companies' stocks. This index measures how well the large companies in the U.S. stock market are doing. IVV uses a special way of picking stocks to invest in. It chooses a group of stocks that, when combined, act like the S&P 500 index. This method tries to match the size, types of industries, and important financial features of the index. One of the benefits of this approach is that it usually costs less and might do better after taxes than funds that are managed by people making lots of trades. IVV promises to invest at least 80% of its money in the stocks that are part of the S&P 500. It also might invest in things like futures, options, and swaps to better match the index. At number 5, we have Fidelity 500 Index Fund. Known by the ticker symbol FXAIX, the Fidelity 500 Index Fund is a distinguished player in the index fund arena, known for its strong performance and investor-friendly features. This fund has an impressive average annual yield of 9.91%, a dividend yield of 1.4%, and a low expense ratio of just 0.02%. According to these metrics, John is on track to reach his millionaire goal in 22 years by consistently investing $12,000 annually. In 22 years, his portfolio will be worth $1,573,000. Over the 22-year period, John's total investments will amount to $276,000, resulting in a remarkable portfolio value increase of $724,573. If he maintains this investment strategy for 30 years, his total contributions will reach $372,000 and his portfolio is projected to be valued at $2,283,687, yielding an impressive capital gain of $1,911,687. This fund, like our previous index fund, also focuses on tracking the S&P 500 index. In terms of performance, it has consistently shown a strong correlation with the S&P 500 index. Its strategy of closely tracking the index has historically enabled it to replicate the performance of the benchmark closely. This adherence to the index's performance, combined with the fund's low expense ratio, makes it an efficient choice for investors seeking market-aligned growth. The fund's strategy of lending securities to earn additional income for the fund is another factor contributing to its appeal. This practice can potentially enhance the fund's overall returns, offering a slight edge over similar funds that might not employ such strategies. Now we move on to index funds that heavily rely on annual growth. These will not only make you a millionaire, but a multimillionaire. In the end, we will show you an index fund that will add over $8 million to your bank account. At number 4, we have Vanguard Growth Index Fund ETF. Known by the ticker symbol VUG, this index fund has recorded an impressive annual yield of 12.74%, indicating its strong performance in capital appreciation. Additionally, it offers a dividend yield of 0.5%, which, while modest, adds to its overall return. VUG also has a low expense ratio of 0.04%, making it an economically efficient option for investors. Now, based on these metrics, John is well on his way to achieving his millionaire goal in just 20 years with consistent annual investments of $12,000. Projections indicate that his portfolio will reach an impressive value of $1,092,351 in that time frame. Over these 20 years, John will have invested a total of $252,000, resulting in an outstanding portfolio value increase of $840,351. Should he continue this investment strategy for 30 years, his cumulative contributions will reach $372,000 and his portfolio is expected to almost quadruple to an impressive $3,848,197. This trajectory would lead to an extraordinary capital gain of $3,476,197 over 30 years, showcasing the power of long-term disciplined investing. VUG is dedicated to tracking the CRSP US Large Cap Growth Index. This index is composed predominantly of growth stocks from large U.S. companies, representing a segment of the market known for its potential for high growth. The fund strategy involves replicating the target index by investing all or nearly all of its assets in the stocks that make up the index. It maintains each stock in approximately the same proportion as its weighting in the index, ensuring a close mirroring of the index's performance. An important aspect of this fund is its potential to become non-diversified. This can occur due to changes in the market capitalization or index weighting of one or more constituents of the index. While this might increase the risk compared to more diversified funds, it also allows the fund to capitalize on the growth of its most successful components. Next up, we have Fidelity NASDAQ Composite Index Fund. Known by the ticker symbol FNCMX, this index fund has a compelling average annual yield of 13.09% and a dividend yield of 0.6%, which, though not the primary focus, adds to its overall attractiveness. The expense ratio stands at 0.37%, which is relatively moderate, especially considering the specialized nature of the index it tracks. According to these metrics, with a $12,000 investment each year, John will reach his millionaire goal in just 19 years. His portfolio after 19 years will be valued at $1,741,000. During these 19 years, John's total investments amounted to $240,000, resulting in a remarkable portfolio value increase of $760,741. If he continues with this investment strategy over 30 years, his total contributions will reach $372,000 and his portfolio is expected to be valued at an impressive $4,144,377, an impressive capital gain of $3,772,377. Now he can call himself a multi-millionaire. But is it possible for John to double that in the same number of years? For this, wait till the last index fund on our list. The Fidelity NASDAQ Composite Index Fund's investment strategy involves closely tracking the NASDAQ Composite Index. This index is a broad representation of stocks listed on the NASDAQ stock market, encompassing a wide array of sectors with a particular emphasis on technology and growth-oriented companies. The fund uses statistical sampling techniques to create a portfolio that mirrors the investment profile of the entire index. This approach considers various factors, such as capitalization, industry exposure, dividend yield, price-earnings ratio, price-book ratio, and earnings growth. Moreover, the fund also engages in securities lending, a practice that can generate additional income for the fund, potentially enhancing its overall returns. The fund may operate as a non-diversified fund, mirroring the diversification level of the NASDAQ Composite Index. This means that changes in the market capitalization or index weighting of certain index constituents could lead the fund to hold a more concentrated portfolio, which could involve higher risk, but also offer the potential for higher returns. At number 2, we have Shelton Capital Management NASDAQ 100 Index Fund Investor Shares. Known by the ticker symbol NASDX, this index fund has an average annual yield of 13.69%, indicative of its robust performance. Additionally, it offers a dividend yield of 0.4%, supplementing its total returns. Although its expense ratio stands at 0.63%, which is slightly higher compared to some other index funds, the performance and specific focus of the fund often justify the cost. Based on these metrics and a $12,000 investment each year, like before, John is expected to reach his goal of becoming a millionaire in 19 years. His portfolio is projected to be valued at $1,066,232. Over the 19 years, John's total investments will amount to $240,000, resulting in an impressive portfolio value increase of $826,232. If he continues following this investment strategy for 30 years, his total contributions will reach $372,000, and his portfolio is expected to grow to $4,650,682, yielding a substantial capital gain of $4,278,682 over 30 years. This fund is designed to closely follow the NASDAQ 100 index, which is composed of 100 of the largest domestic and international non-financial companies listed on the NASDAQ stock market. The fund is passively managed, aiming to invest primarily in the stocks comprising the index in such a way that each stock's weighting in the portfolio approximates its weighting in the index. Shelton Capital Management, the fund's advisor, strives to maintain a high return correlation with the NASDAQ 100 index, targeting at least 0.95. For the rest of the 0.5 deviations, the fund opens to investing in securities issued by other investment companies if they align with the fund's investment objective. And now, we move on to our final index fund, the fastest way to make you a multimillionaire. At number 1 is Invesco QQQ Trust Series 1. Known by the ticker symbol QQQ, the Invesco QQQ Trust ETF is a highly regarded fund in the investment community, especially for those seeking high growth potential. This fund has a remarkable average annual yield of 16.61%, which is indicative of its strong performance and growth capabilities. Additionally, it offers a dividend yield of 0.5%, and the expense ratio of QQQ is set at 0.2%, which is relatively modest considering the high yield and growth opportunities it presents. Before showing you how much John can earn with this fund, let's see why this fund is doing so well. This fund is made to follow the NASDAQ 100 index, just like the previous investment we discussed. It is usually done very well, almost the same as the NASDAQ 100 index. The fund mainly invests in the stocks that make up this index. This gives investors a chance to benefit from the growth of some of the biggest and most creative companies in the world. These companies are leaders in areas like technology, telecommunications, and biotechnology, showing how the world's economy is changing. One of the key appeals of this fund is its potential for high returns, thanks to its focus on high-growth sectors. While this focus can lead to higher volatility compared to more diversified funds, it also offers the opportunity for significant capital appreciation, which has been a driving factor behind the fund's popularity. Now, back to how much John will earn from this fund. QQQ Index Fund's metrics suggest that John is on a fast track to achieving his millionaire goal, with an estimated timeline of just 17 years. By consistently investing $12,000 each year, his portfolio is projected to reach an impressive value of $1,089,682 within that time frame. Over these 17 years, John's total contributions will amount to $216,000, resulting in a remarkable portfolio value increase of $873,682. But it gets even better from here. If John continues with this investment strategy for 30 years, his total contributions will reach $372,000, and his portfolio is expected to be valued at an impressive $8,501,865. This journey would result in an impressive capital gain of $8,129,865 over 30 years. Sounds good, but maybe you want to live off dividends. For this, watch our Warren Buffett guide, The Fastest Way to Living Off Dividends.